Hello everyone, here are the latest market news on October the 3rd, 2019. U.S. plans to impose tariffs on EU wine and cheese. The United States is set to impose $7.5 billion, £6.1 billion on tariffs on exports from the EU, including scotch, whisky, French wine and cheese, and aircraft in relation for subsidies given to the aerospace group Airbus after a World Trade Organization ruling. The tariffs, which are announced on Wednesday, could come into effect as early as 18th of October and represent a significant widening of the Trump administration's trade dispute with the EU, adding to growing tensions in the world economy. The U.S. Trade Representative's office released a list of hundreds of European products that will be subjected to a 25% tariff, including British woolen jumpers and pullovers. Cookies, salami, butter, and yogurt from some countries will be affected, along with olives from France, Germany, and Spain. EU-produced pork sausage and other pork products other than ham and German coffee. The U.S. has also imposed a 10% duty on EU-made airplanes that could hurt U.S. airlines that have ordered billions of dollars of Airbus aircraft. Asian shares fall on new U.S. tariffs on EU goods. Asian stocks hit a one-month low on Thursday amid concerns about global growth worsened by the United States' announcement of new import tariffs on goods from the European Union. MSCI's broadest index of Asia-Pacific shares outside Japan declined 0.60%, while Japan's Nikkei stock index closed 2% lower, marking the biggest one-day drop since August the 26th. Australian shares slumped 2.07% to a 5-week low. Meantime, the Pan-region Eurostoxx 50 futures dropped 0.38%, while FTSE futures lost 0.34%. U.S. stock futures added 0.22%, but these numbers couldn't strengthen market sentiment after shares on Wall Street experienced their sharpest one-day decline in nearly 6 weeks on Wednesday, when the three major New York share indexes all lost more than 1.5%. Malaysia fines Grab for violating competition law. The Malaysia Competition Commission on Thursday proposed a fine of over 86 million ringgit, $20.5 million on Singapore-based ride-hailing firm Grab for violating competition law by imposing restrictive clauses on its drivers. Country's competition regulator ruled that Grab, which has backing from Japan's SoftBank Group Corp, had abused its dominant position in the market by preventing its drivers from promoting and providing advertising services for its competitors. MyCC also imposed a daily penalty of 15,000 ringgit beginning on Thursday for as long as Grab fails to address the concerns. The Malaysia Competition Commission's chairman Iskandar Ismail said Grab had 30 working days to make their representations to the Commission before a final decision would be made. Oil prices flat amid downward economic outlook. Oil prices were mostly flat on Thursday as fears over worsening global economic outlook offset modest hopes for progress in resolving the U.S.-China trade war. International benchmark Brent crude oil futures slightly fell, lost 3 cents or 0.1% to $57.66 a barrel. Meanwhile, U.S. West Texas Intermediate crude futures rose 9 cents or 0.2% to $52.73 a barrel. Stephen Innes, market strategist at Exit Trader, said what's impossible to ignore is the economic realities being signaled in the latest round of doom and gloom financial market data, which offers few, if any, reason for oil investors to be optimistic over the outlook for global demand. World equity benchmarks hit their monthly lows on Wednesday as signs of a slowdown in U.S. economic growth and weak earnings in Europe fanned fears the global economy could enter a recession.